Let's welcome in our next, our first guest in the morning. So Rohit Srivastav now joins us. Sumit Bagadia is also with us from Choice Broking, Sanjeev Bhasin of India Infoline, as well as T.S. Ananthakrishnan from Religare. Anantha, let me come to you first. What are the top picks that you have at this moment, considering the rally that we have seen? Which are the names that you would bet on?
As in the past, I've mentioned that without taking specific names, we are quite bullish on pharma. We are bullish on select auto ancillaries. Obviously, NBFCs have done extremely well, and valuations have risen in that space. But given the visibility of earnings growth, where many of them are clocking anywhere around 22-23% earnings growth, NIM margins are quite stable. And with many of them coming out with various offerings in the market as interest rates are looking down, I think the NIM margins would start to expand at least for the next few quarters before things start to normalize again. So these are some of the sectors that we are betting in as far as the markets go.
Right. Anantha, I'll just come back to you for the bonds thing, but I'll just get the picks from other guests as well. Sure. Sanjeev, what are the top picks that you have and what's the time horizon that you're looking at?
Well, our top pick is NBCC. We have a target of 300 by the end of the year. We have this, we've been covering this stock over the last 2 years. It's been a 5-bagger. We still think the order inflow and the domestic environment is extremely bullish for construction on tier 1, tier 2. Only the execution is what is going to be the challenge. And, quarter on quarter, we think the results will be much better than the market has made out. Plus, the visibility for the next 3 years is very, very clear on NBCC. The other play is Engineers India. If you recall, we've been telling on your channel from 180 onwards that this will be the best proxy on money coming on the balance sheet of the oil marketing companies and their expansion, both in the hydrochemical and petrochemical cycle. The stock has been on a tear. Yesterday, the margins came much better than expected at 21. It's a turnkey player with construction and designing of hydrochemical and petrochemical. So all that consolidated means that the stock is going to be re-rated. Already it's touched 265, which was our year-end target, and we've just upped the target to 300. Third place, United Spirits, purely on the back that the recent prohibition is now going to give way in the next 3 months. Plus, the company is now seeing expansion in margins and improvement in volumes. Sum of parts at 22-2300, I think it has bottomed out. We have a target of 2700 to 28 in the next 4 months.
Right. Sumit, first time in many few days, you have more sell calls than buy calls. What are the calls that you're looking at, Sumit?
Hi, good morning, Pankaj. Well, yes, absolutely. Today we have selected two sell calls and 1 buy call. I think yesterday, the way we saw sell-off in the markets, which shows that there can be selling pressure in the month of September. We need to see for next couple of days how the market pans out. Immediately, I think Nifty has support at around 8580, which is the same range which we have been talking on your channel from last 8 to 10 days. And on higher side, it has resistance at around 8700.
Sumit, there is a problem in the link. I'll just come back to you. We'll get those sell as well as buy call on IOC that you have. Rohit, what are the calls that you have? Which are the sector stocks you would be looking at?
See, essentially, on the very short-term positive side, I'm looking at HPCL and Jet. Both could be beneficiaries of any decline in oil prices. We've been seeing some weakening. My sense is that we'll probably not see above $51 on oil. It may bounce around a little bit in this range, but eventually see lower levels. And so we would continue to see interest in these contrarian plays. On the other hand, I'm seeing weakness coming in a lot of other segments of the market. We've seen, which include sectors like IT, the public sector banks, and also probably in some of the capital goods stocks. For example, BHEL and Larsen has been showing weakness recently. So I think a lot of stocks are beginning to lose momentum on the upside. So you need to be really careful in terms of what you pick. and those were probably just two contrarian plays that I could think of.
Right. Ananda, just coming back to your point about the NBFC space, we have seen some developments from RBI for development of corporate bond markets overnight. Do you think that itself will lead to a long-term positive for NBFCs and housing finance companies because they are eventually the big borrowers from the banking space?
No, absolutely, because if you look at the increase in the corporate bond market, more and more with credit credit growth hovering around anywhere around 9 to 10% as far as the bank credit growth is concerned, there is huge bit of growth that you're seeing, especially on the corporate bond market. Now, these are mainly on primary issues. If there's no secondary trading on these corporate bonds, so these are mainly where the issuers issue the bonds and they effectively, the investors hold to maturity. So some of these measures in terms of allowing banks to issue masala bonds would obviously be very beneficial. HDFC was the first one to issue. They issued at 833. It's already trading quite tight. If you look at NTPC, which was another masala bond which was issued, that's also trading quite tight. So the cost of many of these, in terms of the cost of capital would come down as many of these are being bought in by investors across the world. So we think it's a very positive measure. We see increasingly the corporate bond market is where things will be tapped, and a case in point with RBI putting in a 25,000 crore limit on loans to big corporates from banks. I think many of these transition will also happen to the bond market. So that's where they would go to access capital, and bond markets where they're getting better pricing at this time.
Sanjeev, you mentioned about Engineers India Limited. Now, it's done about 15% after the results. Still, you would be bullish? Still, you think it's an under-owned name and it can attract a lot of flows?
Yes, and Pankaj, like you've seen the vertical rise in the oil marketing companies, as a proxy to that, Engineers India would be a relatively reasonable play. Plus the earnings now coming on a standout performance, we would say wait for some consolidation, but if you get it on a correction, say 240, which was a previous resistance, will now become a very strong support. Secondly, the valuations, even if it went to 300, if you give it a 1 year forward multiple, it will be very reasonably priced. And like I said, if most people have been left out on the pullback in the oil marketing companies, which have been on a one-way ticket, as a proxy to that, that would be a very, very good play on that.
Right. So just about 5 to 7 seconds remaining for the first stick. Biocon will be in focus. They have got an approval. Engineers India have done very well for the last 2 days. We'll see what it does today. Results, of course, were quite spectacular. Tata Motors will be declaring numbers today. All these stocks would be in focus. Tata Motors first stick 8 rupees higher, 502, 501 for Tata Motors. ICICI Bank about 1 rupee higher or 0.5%. SBI slightly on the lower side. Idea 95 rupees, GAIL about 2 rupees higher, 0.64, Tata Steel up about 0.6%. Axis Bank is up about close to about 585 rupees. Biocon is up 4%. They've got a drug approval coming in. The street seems to be excited about it. It's one of the first ones that has come in largely in the European market. Interglobe Aviation is looking for raising the borrowing limits. However, they have not gone out explicitly and said that they would be looking to raise these funds there, but they are raising the limit. Gammon Infra is a results reaction, but it's a 5 rupee stock. Numbers, however, were not particularly that great. There's also not a lot of coverage on this name. Jaikumar Infra, they've got a big order. Mumbai 3 Metro, they are a part of it. It's awarded to about 6-7 players, 5% higher. They have a JV over there, and within that, they have got this particular order, 163, 164 for Jaikumar Infra. Tata Motors will be declaring numbers today, 8 rupees higher, 501, 502. Tata Motors DVR, of course, would also be similar. Same company, same numbers, but slightly different in terms of voting rights. About 2 rupees higher for Tata Motors DVR. Let's look at some of the other names and what's happening as far as with volumes, what's going up. So Welspun India is now up about 3%. 55 rupees for Welspun. So it's largely looked as if it's stabilized. The circuit opened yesterday. Volumes were as high as about 50 times the 10-day average, and now it's looking like it's giving some sort of movement. Volumes again today are not less. 1.3 million is not a small number for a company like Welspun India. Biocon, we already spoke about it, continues to be at the high. It's about 4.5% higher. 3.5 lakh shares on NSE so far. It's not a very frequently traded counter. It's not a very frequently traded counter like some of the other pharma companies. So that's why, this number seems to be looking good. V2 Retail, we just spoke to them a couple of days back. It's up about close to about 20% yesterday. We spoke to them day before. It's up another 5% today. Not sure if there is any other news flow apart from the opening of the stores that we spoke to them about, but it's up close to about 5.5%. Just Dial up 2.5%, 496, 497 for Just Dial. It went up in the second half yesterday, but that could be because of the expiry. Today, it's up about 2.5%. SP Apparels is up close to 5%. We'll be talking to the management at 10:30 today.
All right. As Pankaj has already mentioned, we take the top traded counters, the one with the highest turnover, the top 50, and then we look at the ones which are gaining the most. And two of them, Pankaj has already mentioned, V2 Retail and SP Apparels. As he mentioned, we'll be speaking to the management. Welspun India is up actually 4.2% on very strong volumes. 2.15 million shares traded right now. 2.4 million shares. So 4% up, Welspun back to that 56 odd level. And it appears to be some sort of maybe a block kind of buying, which took place yesterday also. A significant amount changed hands. Biocon up 4%. We'll try and speak to the management. We'll give you the details of what that is. Essentially, one of the breast cancer biosimilars. The European Medical Association, which is the regulator there in Europe, has accepted Biocon's biosimilar, which it's developed along with Mylan, and they're going to review it. And that's the first stage. It's a very complex review process. That's the first stage that takes place, and after that, rest of it. We'll give you the details. It's about $7 billion. That's the size of the market there. Just Dial, Syngene, Tata Motors numbers will be out in a while. Bajaj Finance up 1.7%. Care Limited has come into the top turnover counters probably the first time in the last 2-3 months, and that's obviously driven by the corporate bond new guidelines issued by the RBI. But Reliance Communication, it is yesterday started its new system, and that's up about 1.5%. India Cements, again, strong movement there, 1.4%. Bharat Financial Inclusion up 1.3%. LIC Housing Finance up. So that entire corporate bond market, the fact that you can use masala bonds to finance tier 1 and tier 2, these are all making a big difference to these NBFCs. Let's quickly take a look at what is losing right now. IDBI down 3.5%. Escorts down. Yes Bank down. BPCL down. Canara Bank down. And obviously anyone with a slightly high current account space, which a lot of PSU banks will have. Axis Bank also down marginally. State Bank down marginally. So if you have a high current account as your source of funding, remember current account is the cheapest kind of funding that a bank can get, then you're going to be in a bit of a trouble, because corporates have now got the other options, especially since they're allowed to lend within that 7-day window, and that's why they really don't need to, it's liquid, and they really don't need to park all their money in the current account space. So that's what it's looking like right now. Anything else that you're picking up, Pankaj?
Well, I just wanted to highlight Power Finance Corporation, or PFC. It's down 50%, but our page has adjusted it. It's getting X bonus today in the ratio of 1:1. So it's down 1% from the closing price yesterday, adjusted for the 1:1 bonus. It's down about 50%. Till yesterday was trading at 240. If you're wondering why it's at 118, it's just a bonus, and it's a technical adjustment. Largely a technical adjustment. Syngene International is also up 2%. We mentioned about Biocon. Syngene is a part of Biocon. It was up 6% yesterday as well. However, volumes on this name are largely yet to pick up. Torrent Pharma has been very, very volatile. It was up some 7% day before. It was down 5% yesterday. Today, it's up another 1-odd%. So looking in largely, at least on the start, it's looking that it's going to have another day which is slightly quite volatile.
Let's just pull up, Pankaj, let's just pull up what the Biocon news is. Biocon is up, and you mentioned Syngene also up right now. Syngene, in fact, has, if we can pull up both the volumes, the trade close graphic that we talk about, because that helps us look at the average volumes right now. So we'll pull up Biocon for you, and we'll also pull up Syngene for you. And there's Biocon. right now at 907, almost 5% up. Let's just show you what the volumes are like as of now on Biocon. And there you see the volumes are normally right now about 55,000 are traded. So now almost 9 lakh shares have been traded. So almost 18 times, 17, 18 times the 10-day average that you see for Biocon. Let's pull up Syngene because Syngene also showed up right at the beginning on high trade. So someone came in and bought a lot of Syngene shares. It is not very liquid. It doesn't trade too much, up about 1.8%. 1.7%. Again, look at the volumes. By now, even if it's averaged out, 3,000 shares are traded normally, and today it's 78,000 shares. So someone has come in and bought that. So let me get Mr. Ananthakrishnan's view on this. Mr. Ananthakrishan, we'll put up those graphics while you speak. What's your take on Biocon and this new development?
Frankly, I don't really, I have not looked at Biocon in a long time, so would not be able to comment on this.
All right. Okay, fair enough. Sanjeev, Biocon, not usually tracked, but you sometimes talk about it. Are you looking at Biocon at all?
Yes, Anand, that has been our top pick in the pharma space along with Cipla. Cipla 475, Biocon was about 750. We think 4 figures is on the cards in the next 3 months. So you could look for levels of closer to 1100 over a period of say 6 to 9 months. This has been a standout performer on the base that insulin and biosimilars have gained a lot of traction, and this would be a path-breaking order which when implemented would put it in the league of Mylan. So I think it's a very big positive, and we would urge investors to look to buy this stock on any decline. So Biocon and Cipla continue to be very good defensive bets in a sector in the market right now.
Okay, Biocon. Tata Motors, Sanjeev, if you haven't already given us your view, you have always been relatively positive about most Tata stocks. I mean, you've always talked about the management being very strong. Tata Motors, numbers are going to be out today.
Well, Prashant, Anand, as a disclosure, 520 was our target for the year end. And, we got there in August. We've tended to book profit or advise clients to sit on cash. We think earnings are fully discounted, even though the stock still remains a good buy, purely on the back that JLR. But we would like to hear more numbers and more color on the domestic CV cycle and how they are going about it. Because it has been a rank underperformer as far as volumes go against an Ashok Leyland. So I would wait for the numbers, but right now in the short term, 520 would be a proverbial resistance. We don't see it crossing that in a hurry. And we think levels closer to 450 to 470 would be good accumulation zone. This also tantamounts that we think 8700 could be the proverbial top. And we are looking for a steeper market correction next week. So Tata Motor would be a proxy to that and would be bought on declines.
Right. Ananta, what will be your view on Tata Motors? You track this name.
Yes.
The outlook would be more important because currency has moved in Tata Motors' favor.
No, so we are quite bullish. We think the sales from both the US as well as from China would start to look good. We are seeing some traction on the ground as far as CV sales are concerned. So we are quite positive. We think the valuations are extremely reasonable compared to some of the other auto names. So it's one of the cheapest auto stock that you can actually get into. So at these levels, we would still look to add.
Right. As far as Maruti is concerned, Ananta, do you believe that that's also a space where people are, slightly pessimistic of what's happening with yen, but with the brand, the launches that they have lined up, you don't see a major downside?
So Maruti has always had this issue which has cropped up in terms of number of competitors coming into the market in the same space. But given the distribution that the company has achieved and on a clockwise precision, the way numbers come up, we still like, and as a disclosure, we do hold it in our funds. So we are quite bullish, and we continue to hold this. We think it may be at a higher band of valuation, but that's for a reason, because given the fact that the stock has visibility in terms of earnings growth.
Right, Rohit. As far as Tata Motors is concerned on the charts. what's the level that you would look at?
Well, my long-term view on Tata Motors is not exactly bullish. In the short term, we are getting some bounce back from, what was its 40-day average yesterday. It closed close to that, around 490 odd. So we are bouncing back a bit. I'm not sure how much more it will bounce. May depend on how the results turn out. So that's purely news-based as far as today is concerned. But overall, my sense is that however far up it goes, it would provide another selling opportunity, because there's likely to be far more downside risk than upside gains when it comes to Tata Motors. So my view is very clearly negative. I wouldn't recommend it for the long term.
Right. We spoke about Biocon. On the charts, it's just at a new level. So you would not be a seller over there, or you would actually be a buyer?
There are two things. One is that, I covered that stock for the long term over the last 2 years, typically in the range of 400 to 600. So we had a target of closer to 1,000. Now you're at 900. So do you buy here? My view is long term, Biocon is in an uptrend. It broke out of that range after, almost 1 to 2 years of consolidation. It will pause somewhere because it's having a pretty good run. And when you do get that pause and correction, it probably give you a better insight to make another entry if you've not already got one. So telling someone to buy here may be a little difficult, though there might still be some more upside as the momentum goes on. Longer term, it's still good, but the question is, where to make that entry for another move up. Whenever you get that consolidation, again, it could be 6 months, 12 months in a range. Whether it's between 1,000 and 900 or whether it's at a higher level, I don't know at this moment. But so you'll have to have that kind of a holding period, because you're already made a pretty good move up for the time being. But the long-term trend is up, so one should keep this stock on its radar for whenever to make that entry.
Right. Sanjeev, Reliance has its AGM next week. That's on the 1st of September. And, we're getting a lot of notes from sell-side brokers saying that this would be an important AGM. We'll get clarity on Jio, what's the sort of capex that they are looking at, whether they'll make free cash flow next year or not. Do you think that if there was some indication that the capex is halted or it's very low compared to the last few years, Reliance could do well?
Well, Pankaj, it has been a rank underperformer. Around this 1,050 level, it fails to cross it, and below 950 it doesn't go. So I think if you have a 2-year window, then you could definitely be a good play because of Jio, the lifestyle, the retail, and gas, with petchem being the biggest driver. But the numbers notwithstanding, I would say it's status quo. We would look for better plays in the oil and gas space, with ONGC being our top price if oil starts to move up, since it has free pricing power now. On the other hand, the oil marketing companies on any decline become good plays, because we don't see oil staying at these levels of 50 for long. So like I said, you have to have a 2-year window if you want to be in Reliance. Aside from that, we think that at these levels, it is better to be in cash rather than try and spot out non-performers. So we are not advocating buying non-performers like Reliance. We'd rather be on cash and wait for declines in some of the performers to add positions to them.
Right. Sumit, any view on Reliance Industries?
Well, Pankaj, the overall stock is moving in a range, and I feel that for next couple of months it will move in the same range. Immediately, the range that is defined on charts, that is 1050 on higher side, it has a small resistance, and overall resistance comes out to be at around 1080 levels, and on downside the support comes at around 980 and 950. So I think it will move in a range of around 950 to 1080 levels. Anytime any dip in prices till 1000 or 980 levels should be used as buying opportunity for the upside target of 1050 1080 levels.
And what should be the timeline for this sort of a call?
I think it should be for the time horizon for the this range breakout should be almost 1.5 months. I think it will move in a range for at least for next 1 month.
Right. Ananda, any view on LIC housing? 2.5% higher, 570. After the other NBFCs have rallied, do you think this is looking cheap with decent growth visibility?
Absolutely. I mean, we, just as another disclosure that we do own this in our funds and PMSs. Yes, we are quite bullish. We think the growth trajectory is looking extremely good. NIM margins are extremely stable. So, and given the valuation gap that you are seeing between LIC Housing and some of the other peers that you mentioned, we believe this is a good counter to add.
Sanjeev, you know, I saw one email that you sent out to your mailing group, and there you were talking about some of the other charts that you look at, which is the astrological charts. And you seem to be saying that we are imminent, there's some sort of a major correction imminent.
Yes, Anand, we've held that view. We think this 8600 upwards is a very, very frothy area, and globally we are sitting at a precipice. So we are advising people that if you are sitting on profits, turn paper profits into cash. The market next year can see a much more than expected correction. So 82, 8300 will be the first proverbial point, and we'll see it maybe extending beyond that. But let's see, let it play out. We think the next 10 days are very, very precariously poised. Either of the four legs, you know, whether it's currencies, bonds, precious metals and gold and equity, one of these is going to give way, and our bent of mind is on equities. Janet Yellen holds the key for the short term, but I think that will just be an excuse. You know, markets are very, very wary at this point, and they just need a trigger to, you know, get you to be on the downside. So we think 82, 8300 is what we expect in maybe in the next 10 days.
Before I let Rohit go, 82, 8300, that's what Sanjeev expects. You said that the range is on the lower side is 8550, but with a negative bias it could break through. What kind of a support are you looking at if 8550 is broken and it goes below that?
Yeah, I mean, the next level, like Sanjeev mentioned, would be closer to around 8200. That would be a far more significant one. But my sense is that once you've gone below, say, 8480, then you've most probably started a decline that would be larger in nature. The last entire month we've spent in this trading range, and, you know, because it didn't break out, you know, I think a lot of people would go on a back foot and, you know, feel that, okay, wait, let this thing break out. And what if it does make one more attempt to move up before going down? So that remains an open possibility because we still haven't broken 8550. But the sense is when you look at stocks, especially as we saw them yesterday, so many of them rolled over to the downside that, you know, sooner or later, apart from a few up and down moves, you are likely to see a correction develop. And once you break, like I said, 8480, then you should be prepared for 8300 and maybe even lower. I think that opinion I would also hold.
And you also believe that this would be led by the IT and banks?
Those are already the weakest segments. IT stocks are already down. PSU banks have stopped moving up. So my idea was to highlight those are already the weakest segments. Okay. But it's not possible that you get a 300 to 500 point correction in the market and you don't see some of the best performers also give up. You know, so you will have to see a Yes Bank also correct. You know, in that phase.
Okay. At 82, 8300. Mr. Anantkrishnan, would you be a buyer? Would you think that if the big index corrects like that, then it would become a buying opportunity, or would you wait for an entire correction like we saw last Jan-Feb?
No, so our approach is to take, we take a stock-specific approach. So depending upon how the fall impacts various stocks, we would obviously be investing. The fact that the markets can come down to 8200, yes, it's quite possible, because if you look at it, when the markets rallied from 7600 to 8400, the participation was quite low, in the sense that lot of people were hedged and they were looking at 6800 at that point when a couple of months back, and there was very little participation that gave you the opportunity to come in. So can it come to 8200? Yes, possibly, and closer to the US elections, there will be a lot of volatility and statements being made, especially on the technology space, in terms of immigrations, in terms of H1B, and various other things that will be more protectionist in nature. So that would be quite possible. But we are taking a stock-specific approach. If we get opportunities in pharma where we believe earnings growth is stable, we get opportunities in many of the FMCG names where we believe earnings growth is stable, we would be adding to those names.
All right. Thank you so much, gentlemen. Thank you for taking our time for us.